following panel was chaired by Sarah Alexandra, the president of the Emerging Market Private Equity Association, and was titled "What Investors Must Know About Private Equity in Africa." Assembled was a panel of veteran investors in the region who focused on the question of perception versus reality in terms of people's aversion to investing on the continent.
Africa hasn't actually changed that much, I don't think. It's perceptions of Africa that have changed, combined with the fact Africa's hot because the rest of the world has gone cold. This time around, we've kind of missed out on the downtick while the rest of the world fell off a cliff. And I think what has changed most of all hasn't been Africa. Africa, I guess, during the 90s went through a really tough period when there was very little money around, no one any foreign exchange, inflation was through the roof, governance, a lot of governments were unelected, and nowhere has changed, I think, more radically since the end of the Cold War, because America and Russia stopped messing around in Africa back in 1990. They lost interest. Nowhere's changed more radically, but the big change came in the 90s, which most of that was a period of low growth or no growth. And actually in this decade, Africa has been probably the fastest growing region of the world. It certainly has been in the last few years. And you only have to look at the IMF statistics to show that. But what is changing rapidly is perceptions of Africa. Those of us who were trying to get people to invest in Africa 6 or 7 years ago had a real uphill struggle. Now, suddenly, and I think the fact the rest of the world has fallen off a cliff, has focused people on the fact that Africa is not this bizarre place that idiots like Bono and Bob Geldof talk about that's locked in a vicious cycle of poverty. You know, Africa actually is the fastest growing region of the world.
So a lot has changed in Africa. There's a lot of growth, but there's a big difference between growing and providing opportunities for private equity investors to invest and exit and realize their investment. So, Peter, you have had a long career at one of the early movers in Africa with Ethos in South Africa, and then at a certain juncture 4 or 5 years ago, you decided to take probably at that time what was a pretty big risk, I would imagine, and move to sort of all of Africa via Actis. What is it that you saw changing or about to change or had changed that made you believe that the private equity opportunity across the continent was so attractive?
Yeah, thanks, Sarah. I think the reality of Africa is that you've got a situation where you've got a developed South Africa, which is akin essentially to very much the buyout markets we've seen in Europe and the US. And then what you had a situation which was clearly illustrated by the South African companies expanding north. Classic examples are companies like MTN, the big cell phone provider, moving into Nigeria and further afield across Africa, and Shoprite Checkers, which is another big retailer that moved out across Africa. And what was very interesting in both of those cases is a situation where they were able to generate fantastic returns, double to triple the returns they were generating in South Africa, double to triple the growth rates. And in fact, at this stage now, Nigeria contributes more to the bottom line than South Africa does. And again, that just illustrates the potential, the huge potential that Africa has. When you look at across the continent, particularly in the countries with very large populations, Nigeria, 150 million people with growing oil wealth, and you look at Egypt with close to 80 million people. Again, across the continent, you see this emerging middle class that is starting to push on all fronts, demanding more goods and services. And the interesting thing is, the big opportunity in Africa is the structural imbalance between the supply and the demand for goods and services. And I think that just sets up the key for real opportunities in investment. When I travel around, as I did raising the last Actis Fund, and sort of 12 months, 18 months ago, one of the interesting things that I kept being asked by particularly the US investors is, Africa, immediately the issues, the perceptions came across, although I think reality is now starting to take note, as my colleagues were saying. But more importantly, again, one of the sort of stock perceptions was that, well, Africa equals resources. And of course, the resources is an underpin to the African continent, and that's why we've had the Chinese and the Indians, particularly the Chinese investment going into Africa, and I think will increasingly become so. But what is forgotten, I think, is the huge opportunities that lie in the emerging consumer markets, both in financial services, consumer services, and I think infrastructure, as I think the governments of Africa realize more and more, one of the key success to Africa is going to be investing in infrastructure going forward. So I just see more and more opportunity in Africa going forward.
An LP has a pool of capital. There's a certain allocation to alternative investments. Within that, there may be an allocation to private equity. What is first on their list? Usually their home market, U.S. buyout, European buyout, some VC, et cetera. And then sort of you go down the thing. And generally next up, when it comes outside the developed countries, is Asia. So every time that you're in there trying to raise a fund for Africa, you're competing against funds for China and funds for India. And with all due respect, while some Asian private equity is doing pretty well, I think people are making some money over there. So again, what do you say to the LP who says, "I'm just not quite ready"? What is it that they're going to miss if they wait 3 to 5 years?
Yeah, Sarah, look, it's interesting because I sit on the Global Investment Committee for Actis, and the way it works is deals come in from all our various regions in the emerging markets. We've got a big team in China, in India, Southeast Asia, South America, and Africa. And what I find fascinating about this is to look at the different type of deals, the return expectations, and what are the drivers of value. The common themes across the emerging markets are very similar with the points I've made before: consumer, domestic infrastructure, business service, financial services. That is a very strong theme running through the red threads. However, what is interesting about Africa, and to some extent South America, is that, as you say, the hot countries like India and China, where you've got the high growth rates, what you are still seeing is a situation there where you are having to pay deep double-digit EBITDA multiples for these businesses. And these businesses, in many ways, have got very strong competition in those markets. India alone, I mean, I know my colleagues, we look at the kind of competitive forces and the number of private equity players already, including all the big boys out of the US and some of the UK, have now already entering India. Whereas in Africa, as my colleagues know, the beauty about Africa is you can buy the market leaders in these countries that have got real regional expansion opportunities at single-digit EBITDA multiples. When you delve into the various sectors, particularly certain sectors around the areas I've mentioned, you get double-digit growth. And that is the magic I see in Africa, that you can buy these companies. And by the way, they're not going to be around forever. So if you wait 5 years, a lot of these market leaders will be snapped up, all the platforms that are going to be growing, and I think we will quickly find that those are going to become a lot more expensive as reality overcomes perception.